Hey guys, welcome back to the channel. In this video, I'm going to be going over how much dividend income I made for the month of September, as well as give you guys kind of a REIT portfolio update. So let's get into it. And for those of you who may be wondering, I'm a little or getting over a cold. So I apologize if my voice comes off as a little raspy. I was coughing a lot this last week and a half. So anyways, let's get into it. So let's take a look at the activity tab to show you the companies that paid out. These are the companies that paid me all my dividends, and I got some pretty heavy hitters in here, right? So Public Storage, they paid me 142 bucks. Prologis 187, Crown Castle $244. Let's see, SLR Investment Corp, which is a business development company, they paid me 160 bucks. So pretty happy with all these coming in. Again, this is all passive income. I didn't have to work for it, and these just pay me quarterly. I think Main and Gain, Gladstone Investment Corporation, Main Street Capital Corporation, they paid me monthly. But again, look at the dividend yields, is not exactly sexy or exciting. And the reason is because I didn't put a lot of money into them. So let's go to holdings. And I love M1 Finance that they finally consolidated all of this into one area, is the dividend calendar, right? So to speak. So let's take a look for September. I made $996 in dividends. Pretty cool, pretty exciting. And the reason is because, you know, I live here in Thailand, low cost of living type of area. I left the United States back in end of August and got here 1st of September. So, you know, the cost of living here is really, really cheap. I live in a nice condo, runs me about 750 bucks. Electricity, you know, for 3 air conditioners, because I like to stay cool, it's about 120 bucks. And my cell phone internet is about $32 or something like that. And I get a gig up and a gig down for the internet. And my cell phone bills, yeah, or my cell phone is pretty good. I think I get 10 gigs of data, which I don't use, and, you know, about 100 or about 1,000 minutes or something. I don't know, but it's really cheap. So if I was going to use my dividend income to pay for my living expenses, I could, right? And that's the beauty of dividend income, is that it can help you, you know, pay some expenses. It can help supplement your income. You can reinvest it back into the portfolio to compound your growth. Dividend income is awesome, right? It is a true form of passive income. So if we take a look at the total income for the year, so I should be paid $9,200, $9,274. So far, they paid me $7,101. I have pending income, which I'm assuming is for October, of $945. The estimated income for this month, I believe, is going to be $1,200, which is pretty nice. And I'm averaging about $772 a month. Again, my condo by itself is $750. So if I'm averaging this, then at least my living expenses would be almost paid for. So hopefully in 2025, we can get this number a lot higher. We can hopefully get it to $1,000, because then I'll be averaging I'll be averaging $1,000 a month or $12,000 a year. So we will see how that all goes. So let's go back to the portfolio, guys. And we're going to go into the equity REITs, because this is what I want to talk about. So real quick, I don't know what's going on. I think my portfolio is broken. It might be hustling backwards. I'll explain why here in just a moment. But currently, the portfolio value sits at $210,000. We have a 19.44% money-weighted rate of return. That's dividend included in this calculation. A market gain of $11,900. And this actually decreased over these last couple of weeks. And again, I don't know why. The dividends earned, and again, this is over the life of the investments, I've earned $12,000. So really happy with this portfolio. You know, I'm big into real estate. I love the asset class. So I invest into private, you know, real estate as well, you know, like syndications, rental properties, that kind of stuff, and into REITs. So let's take a look at the portfolio real quick. You know, everything's doing well. But over these last, you know, a couple of weeks, you know, I was at an all-time portfolio high of $220,000. And then it just slowly started going down. So now we're sitting at $210,000. So I lost $10,000 in value. And this happened right after the rate cuts from the Federal Reserve, which is crazy, because you would think that once the rate cuts came, that the entire REIT market would just rally hard. But that was not the case. And I cannot find out why exactly this is. The only thing I have found even relatively close to why this might be happening is because of the short-term treasury yields. They spiked, right? They spiked right after the announcement of the rate cuts. I'm not sure why. I'm not sure how, and I'm not entirely certain of how the treasury yields are affecting all the REITs that I own. So I haven't really figured that out. But again, the market is forward looking. So back in, July timeframe, I think, is when, there was rumors about rate cuts coming and they were going to happen in September. So the REIT market rallied hard. It rallied really, really hard. So it was right around here, July, where the REIT market really rallied crazy, right? And it was nice, but I knew it was a vanity number. These gains are just vanity numbers, right? So right now we're on a downward trend. And I don't know how long this will continue because there's a lot of crazy things happening in the market, but we'll see. So let's take a look at the portfolio as a whole. Let me go here to all. So let's take a look at the portfolio as a whole and I want to just kind of give you my thoughts on things. So my biggest winner so far has been my riskiest one, and that is my cannabis REIT, right? IIPR, Innovative Industrial Properties. I have a gain of 138%. Pretty crazy for a REIT to have that much gain. And it's been doing well. Again, I don't know if I'm going to cut it or sell out of it or what. I might definitely take some gains off the table because as you guys can see here, I haven't rebalanced this portfolio in years because I've been in the red since, the rates started going up back in 2022. So I've been in the red since then. And then only recently have I been in the green. And I haven't rebalanced the portfolio in quite some time. And basically rebalancing is in M1 Finance, you can click this little button right here. Let me get my little blue pen here. Well, let's make it red today. You can click this rebalance button, but that will trigger a taxable account or a taxable event if this is, in a taxable account, which it is, a taxable brokerage account. If this was like a Roth IRA or traditional IRA, then you could do it all day long, but this is not. So I typically rebalance once a year, but I haven't rebalanced over the last 2-3 years now. And I don't know if I'll be rebalancing in 2025 either. I definitely should rebalance sometime probably in late 2025, early 2026. For sure, I have to rebalance. But again, it's all dependent on the investor, right? The benefit to rebalancing is you bring all your allocations back to their target weights, to their allocations, right? If we look here, technically I'm overweight in cell towers. I'm really overweight in cannabis REITs. Let's see what else we have. Manufactured housing, I'm overweight in. Apartment REITs, definitely overweight in. And yeah, so basically what a rebalance is going to do is it's going to sell some shares of the ones that are doing well, performing well, overperforming, and they're going to buy the underperforming ones. So again, but that creates a taxable event, so I don't know if I really want to do that just yet. So aside from my IPR being a winner, Alexandria Real Estate still hasn't quite recovered yet, but I know it will. I mean, you could just look at this trend. It's been trending up, right? It's been trending up, and while I wait until it recovers, I'm going to be getting a nice little dividend of 4.44%. So pretty excited about that because Alexandria Real Estate, a lot of people lump them in with, office REITs because that's what Alexandria is, sort of. They're an office REIT, right? They provide office space. But the biggest difference between Alexandria Real Estate and, say, Boston Properties, BXP, is that Alexandria Real Estate, their office space is lab space versus office REITs, right? Office REITs, ever since the pandemic occurred and ever since this remote, work from home model, really took hold, no one wants to go back to working in offices. And a lot of these office REITs are feeling the pinch, they're feeling the pinch of that because if no one's occupying their buildings, they're not getting money, they're not getting rental checks, they're not getting paid, right? But with Alexandria Real Estate, it's lab space. So scientists, they don't have labs in their homes. They can't really work from home, right? They have to do a lot of their experimenting and all their stuff in clean, sterilized, controlled, secure lab space, right? And that's what makes Alexandria Real Estate so attractive to me is that, it's not an office. It's a very niche, it's a very niche sector, I suppose, or real estate that they're investing into, right? It has, Warren Buffett calls it the moat, right? So Alexandria Real Estate has that moat. It's lab space that they lease out. It's not just office space, right? With a water cooler. So this portfolio is doing well. Again, I can't explain what's going on with this, but there is some hopes on the horizon, specifically with more interest rate cuts. And I don't know when these may happen because it might come up different times. But basically, there's an assumption that Powell is going to be doing another 50 basis point cut here in the future, and it might be 25 and 25, in November and December respectively, or it might be a full 50 basis point cut, right? And it really depends on how these next couple of months go with the CPI, inflation, the unemployment, jobs claims. So it really depends a lot on that stuff and how that goes. If everything comes in very favorable, then I could see, a 50 basis point cut probably in November. I'm not betting on that at all. I'm not saying that's what's going to happen, but I'm, thinking that, just out loud here that if it does happen, it's probably going to be because of those things. So I'm going to just be keeping an eye on CPI, inflation, the jobs report, and, just the unemployment rate as well. So that's going to pretty much do it. I hope these rate cuts provide that rally that I'm looking for, because again, this is all cool and all, but, seeing it hustle backwards it's not alarming, but, it kind of sucks. It just kind of sucks. So, a lot of people in the REIT and real estate space, they're waiting for these 50 basis point cuts, these interest rate cuts. And everyone was saying kind of the same thing, that it's going to be a huge rally for the real estate market, right? Both REITs and rental properties, real estate, commercial real estate. There's going to be a huge, amount of loans that are going to get refinanced, all that hoo-ha. But at least for the REIT market, not so much. It didn't play out. And I don't know why, but I know, the market is a forward-looking machine. And not only that, I'm a long-term investor, right? There's a lot of crazy things happening in this world right now, aside from the, war that you got going on, Ukraine, Russia, but now you also have Iran beefing with Israel. And just recently they launched a bunch of missiles over them and over to Israel. Now Israel's looking to retaliate. Plus you have, just a lot of uncertainty and tension in the Middle East. Then we also in an election year, so there's a little political risk there, depending on who's going to be president, what their policies are. And there's so much going on, right? There's just so much going on. The United States just got hit with a huge hurricane, right? Across I think 10 states or something like that. There's just so much going on, and the market is reacting, right? The market is reacting to all of this. I'm not saying specifically that REITs are reacting to this, but I'm saying the market in general is reacting to a lot of this. And, I think as a prudent, investor, if you're having a long-term mindset and, within like kind of a historical performance, context or historical, based on, historical performance, that through wars, energy crises, geopolitical crises, tensions, trade wars, just everything that's ever happened, recessions, disasters, the list goes on. The market has always recovered and the market has always went up. Now that doesn't mean every single company is going to go up, but the market in general always goes up. And the picks that I have, I'm very confident in. I'm invested in cell towers. I'm invested in industrial REITs, right? Industrial REITs, they own huge warehouses. They do a lot of logistics work, right? This is where like the Amazon packages all live. Apartment REITs, everyone needs a place to live. These are huge multifamily apartment complexes and communities, right? And these companies they own thousands of units. You have storage REITs. There's nothing special about storage, right? It's just, 4 sheets of metal, a foundation, if you even want a foundation, and a lock and a couple rivets and a roof, right? And then boom, you have storage, right? And it's a very simple business. People always need somewhere to place a bunch of their trash. Triple net lease REITs, these are companies that lease space to, the McDonald's, maybe not the McDonald's, but, the Cheesecake Factories, the Texas Roadhouses, the Dollar Generals, the Family Dollars, all of the retail stores. These are the companies or the real estate companies that lease out those spaces. You have manufactured housing. and you have strip center REITs. One of the big ones, if you're from Boston, they're a strip center REIT, right? Assembly Row. They built and manage that whole place. And Assembly Row is beautiful. Like, it's a really nice area. They basically redeveloped this decrepit, aging, like, hood into a super nice area. Really nice. I lived in Boston, so I'm very familiar with Assembly Row. Then I already spoke about, biotech labs, casino and gambling. I'm just invested in Vici. I know there's a couple other gaming and leisure companies out there, but I'm just invested into Vici, and it's been doing pretty well. I don't know. I mean, I'm not getting like 100% return on it, but while it's recovering, while I dollar cost average it into it, I'm collecting a nice 5% dividend yield, right, on the money that I've invested into it. And excuse me, sorry, throat's all scratchy. Single family homes, again, everyone needs a place to live. This is a REIT, Invitation Homes. They invest in single family homes, and they had a huge rally right after the pandemic, right? And look, it's trending up. I don't know if you guys can see that, but it is trending. Aside from these spikes, because these are, lack of a better term, cash injections, but it's trending up. So pretty excited about that. So that'll pretty much do it for this video, guys. I hope you guys got a lot of value in this. Just for, a quick shout out, I do have a Skool community. It's just me and a bunch of other investors. We all like, just talk in there. So if you are interested in something like that, I'll put a link down below in the description. Other than that, guys, hope you guys have a great day. And remember, stay invested, play the long game. All right. Building wealth is a long-term game. All right, guys, I'll see you in the next video.